The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
How'd that happen? I was muted to start the program. We got the S&Ps right now up 8 points, folks, trading at 41.93. The NASDAQ 100 up 33 points, 13,687. We got the Dow up 50 points, 34,321. The Russell up about 9 points, 22.15. Crude pulling back a bit, still. Taking a look at the daily chart of crude, basically bumping up near the highs we had. That high level, you're talking about a price tag of about $66. You see, we've risen up there on a few different occasions, only to pull back a bit. We're going to be talking to our man Teddy Kegstad at 40 past the hour today. We'll be talking Forex, always tying in that crude market, talking about countries, producers, whether it's commodities, whatnot, how that plays into the Forex market. Be interested to see what Teddy has to say at 40 past the hour. Gold, how about gold accelerating higher? Look at this move we've had since basically the beginning of April. Gold was trading at that time. You're talking about $16.77. How about adding $230 right now to the price tag at $19.07. Next stop's probably going to be the two highs we had from November 9th and also back to the area of January 6th. You're talking about a price tag there of about $19.60, and the price of gold, we're trading at $19.07 right now in the price of gold. Jumping around, silver up about a penny at $28.07. Pretty similar action in silver bumping around. I got a consolidation here on silver. We're going to activate that drawn. We're going to draw it all the way out to the right because that's an area, folks, we've seen resistance on a couple occasions, dating all the way back to August, where silver gets up to about $28. We've seen it trade a little bit lower on a couple occasions from that price point. And we'll jump to the VIX this morning as we got markets in higher territory. We got a VIX at 1855. All things considered, relatively low VIX compared to where we've been for the past year. But you put the VIX on a 3-year weekly, and man, you don't have to go back far to get a 10 handle, almost a 9 handle, right? We were flirting with levels, lows in the 11s coming into really the end of 2019. And remarkable when you look at where we were. We had a VIX of 13 back in February of last year before you really had the run higher to 85.47. But 18.55 as we come in 2 full trading days after today. So we'll call it 3 full trading days left until we come into that long weekend. All right, let's start it off with the big dog, Amazon. Amazon, quite the acceleration. During COVID, you trade from about a low of 16.26. We're sitting basically right at double the price tag of that at 32.59. So you have Amazon. We're going to put it on a 15-minute. We're trading higher this morning with the market, not necessarily on the news that they'll be purchasing MGM the studio, not to be confused with MGM the casino. Nothing to do with it. They're buying MGM the studio. The biggest brand they have, James Bond. Shoring up their catalog as that whole streaming sector seems to be consolidating in a big way. Amazon making sure that they don't get left behind. So we stopped yesterday at 32.59, as in they closed yesterday at 32.59. This morning we're trading with a bid ask at 32.73 by 32.78. So what I want to talk about real quick, because it's so interesting, some of these companies. Now, Amazon would probably be higher even without that acquisition, right? Not really playing into things. You got tech stocks higher. You got Microsoft right now sitting barely higher to the tune of about 50 cents. Let's see how Apple's trading right now, a little bit elevated as well. So Amazon trading up with the market, not necessarily on the news, okay? But it is always interesting when you see a stock that moves in the span before the market even opens the next day and their market capitalization pays for the purchase that they just made. So Amazon, getting into the Analyze tab, love the Analyze tab on the Thinkorswim platform. They have more numbers than I know what to do with in here. You're talking about a company right now valued at $1.65 trillion. Outstanding shares, about 500 million. So to make up the purchase price of $8.45 billion. So let's get into the numbers. Amazon buys MGM for $8.45 billion. Now, it's interesting. We're going to take a look at the second largest acquisition since it paid $13.7 billion for Whole Foods in 2017. Remarkable, folks. It's been almost 4 years. Just looked it up since Amazon purchased Whole Foods. They did it back in June of 2017. We're going to take a look at that in a moment. Remarkable that they only paid $13.7 billion for a company like Whole Foods. A drop in the bucket for Amazon. Seems to be going well considering how Amazon's stock has been performing. Grocery delivery, right? Just a mammoth number, talking about Walmart trying to get into it. Instacart. I'm a big Instacart fan myself in terms of delivery, groceries, etc. Amazon doing it all. But point being, so you got to only rise. Amazon only has to rise $17 to pay for an $8.45 billion acquisition. And that's because the company is valued at almost $1.7 trillion, right? An $8 billion line item, not going to be make or break a $1.7 trillion company, but always interesting. We see Amazon now up almost $17. You're up exactly $17 on the ask, but the bid ask is $32.72. Now, what I'm going to do real quick, I'm going to go back to, I got a 5-year daily. Let's find it. 5-year daily. There we go. I'm going to zoom in on the action on June. Just to see, because Amazon, man, you got to love when you have to, right? So I zoom in on June. Here I'm going to zoom in on it again just to see the real run. There's June 15th. There's June 16th, okay? Amazon comes out with the news that they purchased. This is June of 2017. We're still talking about 500 million shares, okay? But you have, for every, so to put it in context, for every $10 Amazon goes up, that's $5 billion, right? So you would need, for a $13 billion purchase of Whole Foods, because I remember this going on, they purchased Whole Foods for $13.5 billion, I think, 13.7, what was the number? $13.7 billion, and you had their share price at the time hovering just under 1,000, okay? But you traded from a close of $9.64, and the next day you closed it out at $9.87. You added $22. They had $11 billion to their market cap. They inched up the next day. Point being, they basically paid for the Whole Foods acquisition just by the market capitalization of Amazon increasing during that time. Always interesting to see how that plays out. But nonetheless, in the streaming wars, Amazon just making sure that they can continue to compete. It's always interesting, and this is why I've been such a big bull on Disney. I said this to friends. Tell me one program on Netflix that everybody wants to have that doll, everybody wants to have that lunchbox, everybody wants to have that merchandise, right? Point being, yeah, there's a few shows out there, maybe Stranger Things. I'm a big fan of Stranger Things. Maybe they've been able to merchandise that, but it's difficult. They don't have a lot of content brands that are indistinguishable across the board, right? They just have so much content. It's amazing. Reason why you have such a bull on Disney early on is because their library of content is unmatched, folks. Unmatched in a big way. There's only one Mickey Mouse, along with every other thing that they got going on at Disney, right? You got Star Wars in there. You got Mickey Mouse. You got, what is it, Marvel in there as well. Those can continue to just churn movies out because they're so recognizable to the whole world at this point. There you're seeing some of what they're paying for. You know, the ability to take a franchise like James Bond, along with, they got 4,000 films, 17,000 TV shows to bolster Amazon Studios, its film and TV division. Really interesting to see how that's going to play out, especially when you got the time where Discovery, AT&T, they're talking about a $43 billion merger. It's big numbers, folks, but Amazon, they're always staying a step ahead. $8.45 billion. They got MGM in the coffer now, and Amazon a little bit higher on the morning, but with the tech stocks. All right, folks, stay tuned. We got a lot of earnings, folks. We got Dick's Sporting Goods out with their numbers, awesome numbers. We're going to be talking with Kevin Hicks when we get back from the break. Stay tuned, folks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now up about 7 points. NASDAQ 100 up 35. Checking out some of the stocks. So we got earnings coming out. Dick's Sporting Goods, they are accelerating higher in a big way. We're going to push all-time highs right now in the open. You back Dick's up. You put it on a 3-year weekly. There's your high, 91.80 just a couple weeks ago. And we have a bid right above that level, 91.89 bid ask above all-time highs for Dick's. Jumping back to what they have going on. Let me pull it up. Here we go. Dick's Sporting Goods, earnings crush estimates as kids head back to team sports. Retailer raises forecast. That's what you want to see, folks. What's the forecast coming at you? How about the earnings? $3.79 versus a $1.12. $1.12. What are these analysts doing, folks? Exaggerating a little bit, but man, talk about all over the place. Revenue, $2.92 billion versus $2.18. Folks, percentage-wise, that'll make your head explode. I mean, if you were running a private business and you're expecting to take in $2.18 billion in revenue in 90 days, and guess what? You add, what is that? $740 million extra revenue over the course of 90 days. That's almost $10 extra million every single day in revenue than what the market was looking for. And percentage-wise, it is a staggering beat in revenue. Net income growing to $361 million from a loss last year. Revenue growing 119%. Again, the numbers from last year, not really a great comparative. On a 2-year basis, love to see that analysis. Sales up by 52%. Big numbers, folks, and you're seeing that hit the charts in a big way, of course. When you get the charts, you get Dick's pushing all-time highs. What else we have? Urban Outfitters. They are URBN. They're out with their numbers. They are trading higher at almost $39 right now. Let's put it back on a year daily. We're pushing basically right up to that level that we were chopping around at. You get a high of 41.95 recently. We'll put it on a 15-minute to see the action this morning. Out with their numbers last night, and you trade dramatically higher on Urban Outfitters with their number. And on the flip side of that, we got Nordstrom trading lower on their numbers from about $36.50 this morning. We're trading at about $33.80. All right, folks, let's jump over to our man Kevin Hinks. Every trading day, Fast Market on the TD Ameritrade Network, right here on Tiger TV, 11 a.m. Eastern Time. It's still earnings, folks. I just went over. We get some movers today. We get some earnings after the bell today as well. Coming into that long weekend, we got some economic data towards the end of the week. Kevin Hinks, good morning.
Good morning, Tommy. Yeah, this is a big day for earnings, a big day. A lot of news out to start the day, but I think the number one thing that your viewers should think about is what is the overall temperature of this market. And yesterday's attempt at a rally and a failure is interesting in terms of how that plays out. And we're green across the board in terms of futures this morning, and let's see if these rallies start to fade, at least till we get some real economic data. But pretty solid news out of Ford this morning, pretty solid news out of Amazon buying MGM. The mortgage apps data was light, but there's a lot of things going on this morning. How about the earnings in some of these retailers? You've got Dick's higher, Urban Outfitters higher, Abercrombie & Fitch higher, Capri Holdings higher. The only one soft, like you mentioned, is JW Nordstrom, and you're at a pretty significant technical level here in Nordstrom, right around $34. So let's see if that holds today. So a lot of things going on, even though this feels like the quiet before the storm as we get a bunch of economic data coming out late, Thursday and Friday.
It's a great point, man. I got a chart of JW Nordstrom up here, and you don't have to be a master technician, folks, to see that $34 area on the chart. We've bounced many times. That's been an area of support. We fall through there. We'll see where we go. And, yeah, how about Dick's, Kevin? I was talking about this coming in. Revenue, how about if you were running a private business? Some of these beats are just staggering. We've almost come to expect them because they're so staggering. Revenue, $2.18 billion was the expectation, and they come in at $2.92 billion. Kevin, that's $740 million of extra revenue when they were only supposed to take in $2.18 billion. Percentage-wise, that's just a staggering number, man, in my head. We're seeing it across the board, some of these retail stocks, right? We saw it with Walmart, we saw it with Amazon, Target, just staggering, man. Dick's continuing to exceed expectations, and the stock's going to open basically at all-time highs. So with that in mind, Kevin, I know we got some stocks still coming up. We got a decent week right now. I think we got NVIDIA after the bell today. What are you guys going to be talking about on Fast Market coming up at 11?
Obviously, we'll talk about NVIDIA. We'll talk about Workday, and we'll look at Best Buy today. We could talk about Dollar Tree and Dollar General. There's a lot of choices today, but NVIDIA will be the focus, that's for sure, and then Workday and Best Buy today.
Nice. So, folks, we got NVIDIA after the bell tonight. We got Workday after the bell tonight. Tomorrow, before the bell, that's what you got. Best Buy, Burlington stores, right? Dollar Tree, Dollar General, Kevin. I always said it's interesting. You hear things like 9 out of 10 companies have reported in the S&P 500. Man, there's a lot of companies that matter still that are out there to trade, folks. Jumping over to NVIDIA, quite a chart. We closed yesterday at 625. The analyze, we got a $24 move we're looking for on NVIDIA, folks. We'll jump over. We're Workday, WDAY. You're looking at right now a $12. That's about a 5% move on Workday. And Best Buy, see how they'll react. You're talking about a $5 move on a $114 stock, and those dollar stocks, man. Always amazing, Kevin, some of the business that you can do when you're selling things for $1. But, man, Dollar Tree, Dollar General. We look forward to the discussion, Kevin. I love the analysis, man, because yesterday, I'm just going to look at the S&Ps before we let you go. It's a great point, man, because all we see is kind of positive prices, But yesterday, zooming in on the Thinkorswim platform on the S&Ps, folks, we started the day at about 42.10. We ended the day at 41.85. And just basically since 8:30 this morning, the markets have given back about 7 S&P points from about 4,200. We'll see where the day brings us. Well, Kevin, we look forward to the discussion as always. We look forward to the education, man, and we'll talk to you tomorrow.
Thanks, Tommy. Have a great day.
My pleasure. You too, man. Folks, tune in every day. Great discussion. You heard the stocks they'll be talking about. It is awesome that we get all the retail stocks, and you're seeing the type of moves that we're getting, folks, as we talked about. Dick's Sporting Goods, my goodness. Well, that's going to open at all-time highs. And, folks, I can't overstate it. I mean, I'm not a financial analyst, but there's going to be some brilliant articles written about the expectations versus what's happening in this market. Because a company like Dick's, that revenue, folks, now earnings is what it's all about, right? It doesn't matter what you're taking in if you can't make money. But most of the time, when a company is raising their revenues, they're going to be able to turn that revenue into a profit at some point. Amazon's the best example of it, right? Forever, they weren't turning a profit. Bezos was just plowing that money of revenue back into the company. Eventually, they turn the spigot. They start taking in some of that profit as opposed to spending everything. It's just a staggering beat when you talk about $740 million of extra revenue over the span of 90 days when you're only supposed to take in 2.18. like, what is that? That's a 30% extra revenue in 90-day period. Just staggering in a big way. And and Urban Outfitters too. Big time numbers. You're trading from 34.62 to 38.83, and love the point Kevin made. Love to look at the areas of support and resistance, folks. Critical level, you might see a bounce on the open because, as Kevin stated, we're coming down to an area. Don't have to be a master technician, folks, to see that 34 has been an area that we have bounced, whether it was back in February, back in early March. Towards the end of March, we bounced as well, and then April 21st before we accelerated all the way up to 43.80, and just like that, we're going to give back $10 in the price of JW Nordstrom from just where we were trading at on May 18th, 8 days ago. All right, folks, stay tuned. We'll be back in 3 minutes for the opening bell. Got lots to talk about. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got S&Ps up about 6 points at 4192. The NASDAQ tech stocks, NASDAQ 100 up about 30, and the Dow up about 64. Still time to give us a call, folks. What are you looking at this morning? 877-927-6648. Give us a call. And let's jump to commodities. Crude backing off a bit, 65.57. And how about that gold contract above 1,900? Little bit of a volatility on 8 o'clock. We spiked to 19.15. We're sitting at 19.07. All things considered, though, gold been on quite a run recently. And let's jump to some of the equities with action so far this morning. You know what? Before we do, weekly mortgages. Let's jump to this one. Demand falls as interest rates move higher. Not too surprising. Average rate for a 30-year fixed rate mortgage, 3.18% from 3.15. Refinance demand falling 7% last week, 9% lower than a year ago. Mortgage applications to purchase a home increased 2% for the week, about 4% lower than a year earlier. Total mortgage volume fell 4.2% last week from the previous week, according to the MBA seasonally adjusted index. And as they say, average rate 3.18%. And that's for a 30-year fixed rate mortgage with a conforming loan balance, basically about $548K or less. All right. Now, let's get into some of those stocks that are moving. So we talked about Dick's. How about Abercrombie & Fitch? They're trading higher as well. Some of these retail stocks, online investments, reopening, fuel, revenue beat. Abercrombie, bigger than expected, 61% jump in first quarter sales. I really wish, I say it often, folks, that these articles, CNBC is basically clickbait anyway. I pull up some of these articles, folks, just because they do a good job of really quickly getting out the news that's driving some of the most talked about equities of the day. But if you want real analysis of equities, don't turn on CNBC and don't turn on their news. I pick up the numbers, but man, they just, point being, you should be seeing a lot of comp numbers versus 2019 if you want a real analysis of how a company's doing. Now, expectations are everything, okay? But if you want a real idea of if they're growing or if they're shrinking, tell me how they're doing versus 2019, which was a normal year, versus don't tell me how they're comping out versus a year ago when the world was hopefully nothing like we'll ever see it again. You know, not a fair comparison to say what your comp sale is versus a year ago, because that's going to tell me nothing about what it's going to be a year from now. Do you understand? That's the point. Comp sales are supposed to tell you about future expectations of growth. All they're telling you is how they compare to last year, which is an off year to compare it to. But nonetheless, staggering numbers, 61%. And it's all about expectations. You're seeing analysts continually undercount the expectations in terms of where they're going. 61%, as we said. Overall net sales, $781 million. Market was looking for $687. First quarter sales rose 6% from pre-pandemic levels recorded in fiscal 2019. There's the comparison you always want to focus on. Excluding items, 67 cents a share. Market was looking for a loss of 38. Did you get that one? And there's the, ANF. We'll pull up their stock. There's the reaction from 37.50 to 41.25. Now, this is just bumping basically back up to where we were recently, but you're talking about near back it up for the full COVID experience in terms of lows to highs. We were at 16 prior to COVID, down to $7. We're sitting at 41 so far this morning, up about 8% for Abercrombie & Fitch. Let's see how some of the other stocks we talked about are trading. Yeah, Dick's continuing to run. Not surprising. That stock just continuing, as I mentioned. Staggering beat on revenue, which translated to earnings as well. We'll pull up Nordstrom's as they were lower, and the drops continuing. Down about 10% on JWM on their numbers, and that's a dicey area in terms of we are below anything we've seen. You back it up to the low of February, that's a low of 33.08. Below it all, folks. You're back. Now, really, where's this high? High from December 9th, 32.47. 32.47. The low we have so far today, 32.75. We'll see if this little consolidation here back basically from December of last year into coming into the new year might be a little area that maybe that halts the pain on Nordstrom this morning. Okay, what else we got going on? Let's jump around to some of the stocks that are moving. We got Toll Brothers out with their numbers as well. Beat estimates by 21 cents a share, earnings of $1.01. Revenue exceeded as well. Relatively low mortgage rates. Not surprising. Limited supply of homes for sale helped boost the company's results. They were a little bit higher in pre-market trading. We'll see if they're holding on to the gains. They are up about 0.9% for Toll Brothers this morning. What else we got? Capri Holdings. So that's the company behind Michael Kors, Jimmy Choo. Versace reported earnings. How about this one? 38 cents a share. What was the market looking for? 2 cents a share. Staggering beats across the board. Revenue top forecast as well. Better than expected outlook. CPRI is their symbol. Capri. and they're up about 1.9% on their numbers as well this morning. We talked about toll. Royal Caribbean. So this is interesting. We received approval from the CDC to begin test voyages from the Port of Miami. They're going to be the first cruise line to receive such approval. They said the cruise lines can resume full passenger sailings if 98% of crew members and 95% of passengers are fully vaccinated. Can't do it any other way on a cruise ship, folks. What's always so interesting, I live in Florida, of course. You got a little bit of a battle with the governor saying that he doesn't want vaccine passports, right? Big political hoopla going on about vaccine passports. The thing I don't understand is if you're in the cruise industry, folks, these cruise companies, they are companies that are trying to survive in an environment that the only way they're going to be able to do business to make people feel comfortable is to have an environment where you're not stuck on a ship with 3,000 people and a COVID outbreak breaks out. That's the only way they're going to be able to do business, make money, and create jobs. That's it, period. So you're going to see this play out. Royal Caribbean, 98% of crew members, 95% of passengers. All right, you're going to see that basically they're probably going to require a negative test outside of that. And we'll jump to some of the cruise ships because they have a ways to go. We're up about 0.8%. We're up and near the top end of that consolidation recently for Carnival. What's Royal Caribbean? RCLH? Where are they? RCL. Yeah, Royal's up about 1.7% as well. Carnival, though, I mean, when this trade does turn on these cruise ships, folks, they got some ways to go still, which is why they could be attractive. But you might need to wait a year or two for these equities to get it all back in terms of being where they were prior to COVID. Royal sitting at about 28, but you see, bumping up against that area. We've been bumping up against that area since almost the end of February. Right, so you're talking about March, April, and May, 3 full months that we've been kind of sitting just under 30 for for Carnival, as they'll be the first one. No, Royal. I get them confused, folks. Royal will be the first one to have test voyages coming out of Miami. Carnival probably won't be too far behind that. Okay, Intuit out with their numbers. Quarterly profit, $607 a share. Market was looking for $647. Short of estimates. They're the maker of TurboTax. And that's a weekly, quite a weekly indeed. You put it back on a daily, and we are still higher on those numbers, talking about up about 0.7%. We were just trading remarkably May 11th, at a price tag of about $390. Yeah, $385 up to $442. But they beat, raised the full year forecast. That's what I was looking for. So they miss a little bit, but not a big deal when you got the maker raising its full year forecast and continued improved demand for its product and services. So they are higher this morning on that number. All right, folks, we got the markets giving it back a little bit, putting it back on a 15-minute. And we'll zoom in on yesterday's action. We trade from about a price point of 42.10 when we opened. We finished the day at around 41.85. It's all been negative action since about 8:30 this morning. We're above 4,200. We've given away 11 points now in the S&Ps, and we'll finish it with Amazon, giving it back a little bit with the market as well. Stay tuned, folks. We're coming back with Teddy Kegstad from Forex-Trading-Unlock.com. Talk Forex. Be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have markets barely in the positive right now. S&P's hanging on to gains by about 3 points. You got the NASDAQ up 48, Dow up 32. Russell, though, sneaking into the negative, down 21 points or a full percent. Let's jump over to Forex. Every Wednesday, 40 past the hour, we talk to our man Teddy Kegstad. You can reach Teddy over at forex-trading-unlocked.com every trading day. Teddy Kegstad, good morning.
Good morning. How are you in front of this holiday weekend?
Oh, I'm ready, baby. I'm ready. It's, I got my vaccine. We're going to see the family. It's a new world, Teddy. We're going to get out and about. I can't wait, man. How about yourself?
Well, I'm going to be definitely playing a little golf this weekend. That's for sure.
Perfect.
So
get a little rest, relaxation, gear up for some summer trading, which might not be as calm as maybe it has in some years past, man. What are you looking at in the Forex markets, Teddy, with everything going on we got? Where do you want to start off, man?
Well, we got the dollar that's still pressing lows. You know, we're almost at the low for the year of 2021. We're kind of inching towards it. But you know what? It's been a grind. Like if you look at the euro and you look at a lot of the currencies, even if they're inching higher against the dollar, it's not a radical lift. So, and it's been a range trader's dream for many markets. So let me give you a little brush over on what's going on around the world, and then we'll kind of get into why it's doing that.
Perfect.
So U.S. dollar, Canada. A rally above $1.2202 would give us a nice little corrective rally up to $1.2370. However, unless we see a big sell-off in oil, I don't see that really happening. But this is one we've been talking about for a while. Like, don't try and catch a falling knife. I would say you might want to wait and see if we can get a corrective rally and wait to sell it. So it's really, really a tough trade with that one.
Yeah.
So that one, I would say, if you're trying to be a bull, be very careful, So Australian dollar, New Zealand dollar, we've been talking about for weeks how it's been drifting sideways. We finally have an inkling of a breakout today in the New Zealand dollar, U.S. dollar. I would use caution with that one because with the Aussie not flirting with an upside breakout, and now you got to realize that New Zealand and Australia, I mean, they are islands, one's a continent, but New Zealand has actually had a good recovery, but that's because they're so isolated from the rest of the world. It was very easy over the past year for them to do that, So I think that's why you're seeing a little bit of an upside surge as far as New Zealand dollar versus the U.S. dollar. I don't expect any follow-through momentum. I would use caution with those markets right there, especially the Australian dollar. Like, it's been a range trader's dream for, if you really look at the chart, ongoing now in 3 months, really,
Yeah.
So as far as catching a trend, and that's what you remember, reason you trade currencies is because they trend more than most markets do. That's why I love currencies, because if you're on the wrong side, it's easy to reverse and ride that wave, you know. And when it becomes choppy, the currencies will eat you up, you know. And it's for range traders selling into highs and buying into lows, they're going to just keep on picking you off all day long. So I would be leery of those certain currency zones. Now we have the U.S. dollar Swiss and the U.S. dollar yen. Very interesting what's going on because of the little bit of a rally in interest rate markets, you know, meaning rates going down a little bit, and you have the gold rally. So that coupled with oil also, it's a little bit of a mixed bag of goods. You know, oil tried to flirt with the break. It bounced right back. You know, we're still looking at in front of new move highs again. You know, is that going to happen in front of Memorial Day weekend? Well, we know that typically gas prices and oil prices go up around Memorial Day. So could we have a breakout to the upside, you know, after the numbers later today or into the weekend? Very possible, you know, so we'll have to see how that pans out. And I would urge all of your listeners, I don't care if you're trading currencies, futures, stocks, options, whatever, remember we're coming into a holiday week, you know. Now it's a U.S. holiday week, but volumes get thin. You may have some exacerbated moves, but those aren't good moves when they're vacuum moves. You know, stops can get blown out, you know, and a lot of markets aren't going to go anywhere. There's not going to be any follow through. So that's why, like, especially with the breakout in the New Zealand dollar, I would use caution. Okay. With the yen, my thing is that it's winding its coil. If you look at it, like, the yen hasn't really been trending. It's been trying to grind higher, sells off a little bit, but the ranges are very tight. And when the ranges in the yen get tight, it's just like the pound. Eventually, it's going to explode and have a radical 2-3 day move. Are we set up for it yet? I think you still have to wait for it to see that what this is the decision with oil. You know, gold being up and oil being kind of neutral right now has kind of got, I think, the yen in a holding pattern. But I'm still kind of bullish overall, especially if we can get oil to rally and if there's any type of even short-term correction in gold. The pound right now, it's kind of funny. It's flirting with newer move highs, you know, as oil is trying to break out, but it's not really making any big move. It's a bull, and like that's another one too. If you look at it, it's a range trader's delight. You know, like the ranges in there have been, it's up one day and then it reverses the next day, just takes out the body, and then it does the same thing to the upside. So it's really just churning and burning you, you know. So I used a lot of caution with that one. Once again, watch the oil market. A breakout to the upside probably has the pound flirting with new move highs in a big way. And I have them targeting, if we can get a rally above $1.4238, then my upside target goes all the way up to about $1.4420 before we're going to see a turn in the pound. The euro is also the same way, the euro US dollar. If you look at how it's been chopping and grinding higher, it's a nightmare. If you've been hanging on too long, you really got to hang on and just, you know, one day you're like, okay, we're starting to make some progress. The next day it falls back out of bed, you know. So that's another one. It's a sleeper. I have them basically targeting 123.5, you know. I think it's going to run out of gas. See, as far as on an economic level on the fundamentals there, I don't see where you get enough strength to maintain a euro US dollar rally. This is more of a dollar being beaten down, but now we're flirting with the lows of the year, you know. So the question is the dollar really that weak, you know, or is that going to maintain its momentum? You know, we'll have to see. You know, the dollar index right now, as long as gold is up and bonds are starting to rally a little bit, which is surprising to me, and I think people need to be cautious about the interest rate market right now, that is unfavorable for the dollar, and I think that's why it's grinding lower. But, you know, if you have any significant, just a correction, let's just say that the rally in gold has a correction, which all markets do have corrections, right? A correction in gold and another rally in oil, that's probably going to facilitate buying of the U.S. dollar again. So these are moves that are going to be radical. So as we're grinding the dollar down right now, be careful of a volatile snapback coming up. And that's kind of what I'm looking at right now.
And we're kind of back at to the critical level in the dollar index, basically almost back to like January, right, Teddy?
Correct.
kind of right into that level. And it's really interesting. You know, you look at whether the euro US dollar, that's correlating exactly like you're talking about, kind of 123.50 I got on the chart. We trade all the way lower. So all of those kind of coming in as a technician. I love the fundamentals as well, but some critical areas there, man. If that's resistance, you trade lower, it's going to be resistance again. And the oil, I think about you all the time on the oil, man. And it's like bringing it back to what you talked about in years past, right? You get long weekends, everyone's driving. Tell you, I think this summer, when you talk about travel, myself included, we're already trying to book some. You know, I had a son earlier in the year. We want to make it up to the family in Boston, right? We've had the ability to kind of go out and see family maybe for a couple months, but we haven't had that long weekend yet to do it, man. We haven't had the summertime to do it. So
I'm planning my weekends too. I'm planning my trips too.
Get it done, totally. Teddy, man, we appreciate the Forex education as always. We look forward to talking to you next week, man.
Thanks. You guys have a safe holiday weekend.
Have a great long weekend, man. We'll talk to you next week. Thanks so much. Stay tuned, folks. We'll be right back after the break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Taking a look at the markets right now. We have the S&Ps inching into the negative, just like that. Little dicey scenario considering the action we saw yesterday. Zooming in just on the action on yesterday. We just pushed the lows that we had yesterday afternoon. The S&Ps, you're basically flat at 41.85. You're as low as about 41.81. Tech stocks pulling back as well, hanging on to gains barely. We're up by about 19 points right now. Dow, negative 10 points in the Russell. How about some strength there? Up about 20 points checking in on crude. Down 51 cents at 65.56. Interesting on that crude, talking with Teddy. little negative action coming from that pullback into the highs. We've reached this level on many occasions. We've been bumping up here. It is remarkable when you think about it. You're talking about almost 3 months, folks, that we have been getting used to a 60 handle on crude. Now, in the month of March, we were oscillating around that level. We've been back above 60, though. You're talking about 6 weeks. We've been back above that level, and we're just bumping up against that higher boundary line, $66, myself included. Looking for some road trips, right? Summertime, we got Memorial Day. We got July 4th coming up. We got Labor Day after that. There's some pent-up demand, folks. It's probably going to come in the form of some travel to meet up with family members you haven't seen in a while, whether it's flying, etc. Oil market, 65, 63. Nonetheless, continued strength in gold. Continuing to hold up well right now at 1905. We'll jump over to the VIX. Volatility index right now trading at 1866. Let's jump around to some of the stocks that have had action this morning as we wrap up the program. Nordstrom's continuing to drop, down more than 10% now. Dick's, on the flip side of that, continuing to rise. How about 14%? Folks, I said it. You know, that revenue beat, it better be a wake-up. 2.8 something billion versus 2.1 something billion. You're talking about taking in revenue, and they crushing on earnings, of course, with that much extra revenue. Dick's up 13%. Let's see, what are we talking about from a market cap right now? $8.5 billion. That's a strong company, folks, in a big way. Dick's trading higher, and Urban Outfitters higher as well, to the tune of 14%. Let's check out Abercrombie & Fitch, 13%. Some of these retailers, my goodness, through the roof. S&Ps, though, we're flat. We're in a pretty critical area in terms of where we are. Negative prices, 41.80. The lows of yesterday, we just touched that area in S&Ps. As our man Basil Chapman would say, the day is young. Well, it's young enough. He's coming up next, folks, for the Tiger Technicians Hour. Fast Market at 11. Larry Pesavento at noon today. Steve Rhodes, Dave White. I'm O'Brien this afternoon. Have a great Wednesday, everybody.